Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is previewing a hot 24 hours on the Forex. We've got some big-time news events that have come out today. We've also got some big-time news events that are coming out during the U.S. overnight and during that Thursday session, not to mention Friday's core PCE. We're probably going to save the PCE preview for tomorrow, but that's going to be your big event Friday morning, 8:30 a.m. Eastern, about an hour before that Wall Street open. You need to be ready for the core PCE numbers and the PCE price index. It's all about inflation. That's the Fed's number one indicator of inflation. At least that's what they look at. So it's good to see everybody back in the room. Thamy, good to see you. Bobby Bob, always a pleasure. Bobby Bob, Tuku, always a pleasure, guys. We've got a lot of Forex pairs to look at, a lot of markets to look like. I think that we've got some incredible action. We had a trade idea out yesterday on the Japanese yen on that 920 crossover, and that was absolutely fantastic. That trade's performing very, very well to the bull. We're going to cover that. We're also going to look at the Australian dollar Kiwi, the Aussie Kiwi. That's a sort of a big pair right now. We're seeing a big-time breakout for the monthly. We've got some top-side resistance levels that we need to look at, though. We'll probably start right there. And then we've also got a dollar CAD and about two other trade ideas that I do want to recap and review. We had a sort of a breakout sell in U.S. oil. I got a lot of questions about that in the private message. I want to go through exactly what my thinking is on that trade. It has not been triggered yet, but you definitely have bullish price action here in WTI crude oil. We had a rally, we had a loss of supply, U.S. supply today from our EIA crude oil inventory report. A lot going on, guys. A lot going on for a Wednesday. A lot of times Wednesdays aren't very active. This is a very active Wednesday. A lot of folks are believing that tomorrow's going to be a huge day with U.S. GDP. We're going to set the table. We're going to recap the new home sales data from today. We've got an absolute ton going on in the markets. And also, if you want to ask any questions at all, just be sure to hit me up. Throw a market that you'd like to look at in the live chat. I'm more than happy to look at it. If you have a question about any of the concepts that we're going over, feel free to do that as well. We had a lot of people join us yesterday for that 920 EMA crossover workshop. I want to thank everybody that's out there watching that joined us yesterday. I'm going to recap one of the trades that we outlined on that 920, and it was a fantastic one. It was an absolute banger. So good to see you. Let me see Small Yeezy. Good to see you, Small Yeezy. Tina Jing, always a pleasure, Tina. I'm confident everybody's trading is going well today. I think that it's a good day to be in the markets. Indices a little bit flat, but that's okay. We're not going to get trend days every day. Remember, markets only trend about 30% of the time. The other 70%, they're relatively flat or range bound. So when we know that, hey, every day is not a trend. Every day is not a breakout. We'll have an opportunity to trade just a little bit better and a little bit more effective. Dave F19, good to see you, Dave. All right, everybody, here we go. Let's start off with a little bit of price action. Let me see. Andrea Gorwal. Yeah, hi, Shane. Can you look at crude oil? Absolutely. I have a sort of some analysis we need to go over with crude oil, and I want to go over that last trade idea that I put out, but it's definitely on the rally here. I think you're going to 65, and that's a pretty good area of topside resistance. We'll look at all that, though. We'll get to crude oil here in just a second. Okay, Australian dollar Kiwi. This is one of the pairs that a lot of people are trading right now. There's a lot of buzz in the markets. Aussie Kiwi. Remember, what this boils down to is sort of the price of gold drives the Australian dollar, and the Kiwi. The RBNZ, the Reserve Bank of New Zealand, has been a traditional hawk. They've been a very hawkish central banking entity, and they're sort of going a little bit dovish now. They're trying to promote GDP growth in New Zealand because we're worried about recession in that region. So interesting stuff coming our way here on this pair. Big-time breakout. Big-time monthly breakout. So what do you have right here? We've left our 920 up there just for sort of a reference on what's going on, but you see the crossover on the monthly sort of crossed over right in there somewhere about 2 months ago. Big break. So from a macro perspective, you can't really argue with the 3-month winning streak. It's absolutely huge. Really speaks to a revaluation of this currency pair as a whole. So the Aussie gaining a lot of ground on the Kiwi, but take a look at our key levels up here. These resistance zones, now these aren't necessarily exact. I want everybody to sort of be aware of this zone right up here. This is what you would call your liquidity sweep zones where you get the spike high and then the big reversal. Well, this zone right up in here, right between about 149, somewhere like that, 114.90, so maybe like 115 even, and maybe 114.50. I think that could be a big time resistance zone. So it's really difficult not to be bullish right now towards the Aussie Kiwi, but that area right up there, if you were looking for maybe a topside target or an area potentially to enter a short, you would be looking between 114.50 and 115 even, sort of where this liquidity sweep, sort of where that liquidity sweep develops. Interesting stuff on this pair. It's a fantastic pair. I can see why a lot of folks are trading it. Now, on a 4-hour chart, let's say we wanted to trade right now. What do we want to do? We want to look at a pullback. This is an absolute bullish break, 23rd of September, really in the evening time. They're going into, well, shortly after that Asia Open, that Tokyo Open, big-time break. Big-time break, nice rally. Now what do we have? Price sort of coming off. We got a little bit of an inverted hammer setting up, 38% right there, about 113.09. You guys know me. I love big round numbers. I love them. 113 with a 38% retracement. I'd probably be looking at 113.09 potentially to be a bid, a short-term bid maybe, looking for like 25 ticks to the top side, something like that. The beauty of this trade, it's a 4-hour range. It's a nice big range from 112.58 all the way to 113.41, so about 100 pips. That pullback zone right here, right around 113, probably 113.10-ish. 113.11. I think you have a pretty good chance there to succeed. So that would be an interesting trade. How would you execute? Basic execution would be a buy, limit, and you want to go right there probably from about 113.10. You want to be about as accurate, or excuse me, about as dialed in as you can be as far as precision goes, especially on a short time frame. Something like that could be a pretty good trade entry. If we do get a pullback about 9 pips to 8 pips from here, we may actually get that trade to develop during the live stream. So we're going to go ahead and wait and see exactly how that happens. So really a lot going on in the markets today. We've got a ton to cover, a lot of pairs, a lot of trade ideas to recap as well. So let me see Andy Tall. I'm going to see Andy. Welcome. Angelique, K-View, 25% on puts today based on yesterday's conversation. You guys remember that? 25% on puts. Some of the things that are happening on with regards to Tylenol. I don't know if any of you have been on. I mean, I don't recommend hanging out on X or Twitter or, what's the other one? TikTok. I don't hang out on those platforms very often. I like to post trade ideas on X, and we live stream on X and things. But, as far as some of the things some of the fallout, some of the social fallout from the Tylenol statements that were made Monday, I mean, it's not just financial, it's social all of a sudden. And I don't know what happens to stock price from here. But if you want to trade it, if you want to get in on biotech, if you want to trade big pharma, head on over to Switch Markets. They've got CFD products facing a ton of these individual stocks. And then also you can trade the U.S. stock indices. You can also trade your Forex pairs. This is going to be sort of a Forex-centric webcast. We're going to be focused on a lot of Forex. We are going to look at U.S. oil, though, because it is important. We have a trade idea to look at there, and also a key economic indicator. U.S. oil showed a bit of a draw today. Gordon Williams, good to see you. Let me see, what else do we got? Let me see. Hello. Yeah, Small Yeezy, good to see you guys. All right. Remember, we won some awards. Switch Markets won some awards. I'm covering this every day because the awards just came out. What happened here? One for Best MT5 Global Broker, Best Trading Experience Asia, Best Partnership Program Mania. So a lot of awards there. A lot of folks are really happy about that in the back office. So if you're a Switch Markets fan, or if you're a client, that's fantastic. If you're not yet and you are in a municipality that is supported by Switch, then head on over and see if you can get lined up at least with a free demo account. Those are absolutely free for MT4, MT5. Check those out. We're actually making some videos, some support stuff right now for MT4 and MT5. Those will be hitting the wire soon. All right, trade update. This is one that I put out just a little while ago, and it's a U.S. dollar, Canadian dollar, relatively straightforward trade. Not really too big of a deal. Let's go ahead and take a look at price action. It's easy. This concept is relatively simple. You've got a nice big monthly range, nice spike high there, nice spike low there, sort of a 2-month comeback. We've broken sort of above that 13-month moving average, which is right around 138.82. Now we're above 139. Key level. What's the next level we're looking at? Right up around 140. So we've got a sell idea right in there from about 140.09, just a slight peak above 140, and then we're going to look to sell that market or short the market. That's an interesting type of a scenario because you do see what's been a solid month for the dollar CAD, up about 1%. We're seeing a bounce out of the dollar index, still relatively bearish towards the U.S. dollar, but as we talked about yesterday with that dollar yen trade, we'll recap it in just a second. Markets don't move in straight lines. And when you see the dollar getting absolutely clobbered, as much as it's been clobbered all year long, there are bounces in there where you can make some money. So right here, we've seen a bounce against the CAD this month. A lot of folks are believing that U.S. oil is going to go down. We're not really seeing it just yet. I'm going to go ahead and break that market down in a second. But this right here is going to be a pretty good resistance level. So right around 140, I think our entry was somewhere around 140.09. That's a pretty good trade. I think that to the short is absolutely fantastic. More than likely, I don't know 100% if we get it this week. If I knew that, I would just go long and take the 100 pips. But if, in fact, our level does come into play, we're going to have a real chance to score there. So I'm watching the dollar CAD relatively closely. Okay, here's our U.S. oil. We do have another trade update on this U.S. oil. This is one that I put out yesterday evening, and I really wanted to highlight August's low. That's probably the biggest level you need to remember with U.S. oil right now, and it's 61.45. So let's go ahead and unpack this. I'm going to go ahead and switch my charts over, and we're going to see exactly what's going on with U.S. oil. So now the idea behind this trade is very simple. Now, typically, I'm making retracement trades. Every now and then we'll throw like a crossover trade at you or some different things, maybe from key levels, double tops, double bottoms, things like that. This was a trade that, well, let's be honest. I got interviewed, last year for Business Insider. And I sat down, and the question from the young lady that was a reporter was, okay, Shane, give me one of your strategies that you like to trade for commodities. And I went through a gold breakout strategy. Well, the breakout strategy itself also translates very well into crude oil, typically on a futures contract. Now, this is a CFD, so it's going to be a little bit different because there is that spread that you're going to have to worry about. But this right here is interesting to me. Now, what you've got here is you've got a monthly low. Last month's low is at 61.45. Okay, this month's low is also at 61.45. We're looking to sell the market beneath last month's low. Now, the reason why is we think, well, at least I think, that we're going to get some extension if we do hit that level. Now, here's the deal. There is no guarantee that we're going to hit that level. We may not trade down and check that level out. It's about, $3, $3.50 away. So from that perspective, you'd say, okay, well, will it come into play? I don't know that. If I knew that we were going to go down to 61.45 for sure, I would just sell the market right now, and we would all go out to dinner. We'd go to Outback Steakhouse or one of the one of those other ones. What's a good one? Roost Chris is a good one. There's a couple great ones in New York City. I forget the names off the top of my head. Morton's, that's a good one. Morton's in Kansas City. In any case, we don't know. We don't have a crystal ball. We're not going to the steakhouse. We're not going to go have big dinners and vacations and everything because I know that we're going down $3. I don't know that. And that's the concept behind a breakout trade. You got to get your level and understand what we're going to do once we get that level. Now, once we get an opportunity to trade and our entry points hit, then we have a pretty good idea what's going to happen. But until then, I genuinely couldn't tell you. I genuinely don't know which way the oil market's going to go right now, right this second. 64.90, I'm going to talk about 65 here in a second. But what I will say is this. I got a pretty good idea what happens when this market hits 61.44. If we trade beneath those levels, when we trade beneath August's low, and if September does rotate down for the last few trading days, maybe we wait until October and then we break. But I will tell you that this area right down in here, there are a tremendous amount of retail stop losses right beneath that. Folks that are playing this to the long, they're going to stop themselves out right beneath that zone. Typically, that's what I've seen over the years. A lot of times order flow will spike around those key levels. Check out our key level video. Always remember there's extra emphasis on previous day's high, previous day's low, previous week's high, previous week's low, previous month's high, previous month's low. That's a previous month low. Thus far, we've traded inside of it. I would be looking to get some extension late in the month down here. Now, do we have to get it? No, we don't. And another thing, if it doesn't develop, I really don't care. I mean, it doesn't bother me. I'm not in the market. So right here, we're looking for our breakout to develop underneath that level, and I believe that it was on for like 60 pips or something like that. Should be a significant move. I believe that if you do take that out, you're probably going to go down and check out that 55 zone. Will it happen this week, next week, or the next week? I don't know. Like I said, if I knew that, we would be on vacation. We would have our toes in the sand and drinks with straws with umbrellas in them. We still know that. So we have to wait. We have to wait for our level to come into play and then execute. That's the idea behind a breakout trade. I don't put very many breakout trades out there. Typically, I like retracements. We let the market come to us, and then we do business. I like that better because those are a lot easier to understand in a lot of ways. But basically what we're doing is playing a washout underneath August's low. That's a pretty strong trade if we get it. Now, I don't know that we're going to get it. I really don't. As far as topside resistance with U.S. oil, I don't care for this Fibonacci retracement sequence at all. I don't like it. That's a nice upper tail right there, but we're sort of just trading sideways, and you've got that double bottom from right around 45. So if you wanted to dial this thing in, you could say, okay, well, you've got a 13-month EMA coming down right around, what is that? Somewhere right around 68.52, 67.58. I mean, that's huge resistance up there just in front of 70. I would be absolutely shocked if we trade up over 65. I think 65 is a pretty good zone to be going short, but we are challenging that right now. So let's take this all the way down to a 30-minute chart and look at what's happening during the intraday. Now, you see right here, that crazy candle, that's when our EIA crude oil stocks report dropped, which showed us our weekly inventories, which were a slight draw on supply. That is bad for fall seasonality. We should be seeing supply builds. We're seeing supply draws. That's one of the reasons why prices are up today. Now, what has happened? I've sort of been on record as saying 65 is robust topside resistance because it is a big round number. So what's happened so far? We're testing 65. So if you're looking for an intraday trade, 64.96, we've already got a test of that. We're down right around 64.94. Let's take this down to a 1-minute chart and see exactly what the price actions look like. We're just sort of creeping higher. So if we wanted to, in fact, get involved and make an actual trade on this, we could do a lot of things. As far as a limit trade, I would be looking to sell limit, and we'd be building something. Maybe if you wanted to sell 65s, you could go, 64, 97-ish, somewhere in there, or you could just go right up to 65. I recommend sort of fading the level in front of it. So let's go ahead and just sell 64.97s and see how this goes. How would I execute? Depends on what I want to do. If I want to try to pick an intraday top, I'm going to have to give this thing some room. It's going to have to be probably up to 65.25, and then we'll look for that rotation to the downside. Okay, right now we're already short. We just got elected. How do we want to execute? Do we want to let this sit for a minute, or do we want to scalp? Now, right now we're getting heat right up to 65. There's no question about it. If I wanted to play this very, very tight, I could put my stop loss at like 65.09. It's a higher risk trade, no question about it, because we are playing it very tight. That could be my stop loss. I've got to get at least what I'm looking for here. So I'm looking for what? 13, 12 ticks, something like that. So what do I need to get paid off here? I need to print about an 85. Now that's a 1-to-1 scalp. This should be a scalp. This shouldn't take very long at all. We should know relatively soon, within a few minutes, whether we're right or not. Now, looking at the price action from what is developing from our entry point, I think that we're in decent shape here. The market slowed way down in front of 65. Now, that can tell us two things. Number one, we could get a breakout above 65 and really roll up and stop ourselves out, or we could get the sellers to step in and defend this level. Now, I'm not really interested if it's the intraday top or the intraday top. This is just a scalp. So we've got a pretty good range in. It's a counter trend trade. We're up about 2%. Now the price is starting to come our way just a little bit, but still, we need to see a break. This market needs to break our way for this trade to be functional and successful. Now, is this a low percentage trade? I would say this is one of those trades you need to probably hit 65% of the time to make this thing work for you. If you wanted to shoot for more money, you could adjust your stop loss, and in that case, you've got to go up over the quarter handle, something like a 65.27, and see if you can get that pullback maybe down here to the 64.75 zone, something like that. That really is the two ways that I would look at this trade. Let's just play it tight for right now. And this leverage, remember, this is just sort of demo leverage, but we're watching what happens right at 65. Now, one of the things about 65, it is the first time that we've tested it today. But it isn't the first time that we've traded 65 in the last several months. There are last several weeks. There are people there that have saturated this zone. Okay, so right here, it's make or break time for us. We saw the peak above 65. If we start to get legs above 65, we're probably going to get stopped out. Okay, right there, 65.02 doesn't look real good for us. It really doesn't. 65, if we reject that zone, now we're back to 64.99, but definitely bullish pressure. This is going to be a tough trade to win. We're going to need to see the sellers step in and defend 65. I believe they're there. They're starting to show us that they're there, but we're going to need to see some conviction to take us back down to our 64.85 level. 65.01, you can see right in there. This is going to be compression. This is an extra tight scalp. This is going to be really tough to win. I can already tell you by price action, we could be in trouble here. 65.01, but hey, if the sellers step in, we should get paid off. Remember, 1-to-1 risk versus reward ratio. We only need to win this one 60% of the time, 55% of the time to be profitable over the long haul, and that's exactly what we want to do. So I hope that helps with a breakdown on U.S. oil. I'll monitor this one sort of out of the corner of my eye. We have an absolute lot to get to here today, but that 65 sell, this would probably be a trade I would take live with my futures contracts if I saw something like this come into play. Interesting. It's interesting price action, guys. The bulls are definitely in control today. Can we get a little bit of love there from 65? I don't necessarily know. It doesn't look good, but the jury's still out. We'll see what happens. I would say 80% chance we get stopped out right now, but who knows? You never know. All right, we had a couple other things that I wanted to tidy up as far as trade updates go. Fibonacci support in view for the Kiwi CAD. This was another one that we'd been looking at, and this trade actually is coming into play. We've got sort of that big-time support zone right down here, right around 61%, which is right around 80, 80.19, 80.25. I would definitely be interested in that zone as we move forward in time. I think we've got a chance potentially to hit that one. It just has to come our way. So we're looking to be a bidder from down here. Really tight price action, but I would love to get this in the next several days, and we're almost there. We're only about 50 pips away, something like that. I think we got a chance. Let me see. Lewis Shepard, good to see you. Joshua, good to see you. Ruben, hey, hi. Ruben from Nigeria, catching up with your art. I don't know how much art this U.S. oil trade is. It doesn't look very good. Let's see. We got to get tuned in again. We got a chance, guys. We got a chance. We're getting some compression there. It looks a lot better, in the last minute or so than it did, and now it looks bad again. We need a big, what we call a sweep. That's when the sellers step up and bury the market. We need a sweep from 65. If we don't get it, we're in big, big trouble. And you can see this compression right here. You can already see the patterns, guys. It doesn't matter if it's a monthly or a 1 minute chart. What's happening? That's a bullish pennant. Key numbers where the compression is. Typically, that means a bullish break's coming. We'll see what happens. Maybe the P will reverse itself. I don't see that. I think that a lot of experience goes into these trades. We might get it. Then again, we might not. So we're watching that one closely. I'll be watching that sort of probably as I'm talking here. All right, guys. So in any case, we've got a lot to cover here today. So let's get back to our fundamentals. I also want to take a good look at the U.S. dollar, Japanese yen. That's a trade that we put out yesterday with a 920 crossover. Today, new home sales was the big number. I want to go over that. I'm also Thursday, BOJ minutes. That's absolutely key. S&B interest rate decision and durable goods. We've got the Swiss National Bank getting involved. We've got to look at some Swissy pairs as well. And then also our durable goods orders and all that's before the PC price index Friday. This is a big 36 hours on the market. Make no mistake. It's a big 36 hours. So let's go ahead and get started with our fundies. News of the day. MBA mortgage interest rates came down again for about the fifth consecutive week. 6.34 down from 6.39 week over week. MBA mortgage applications jumped, and that's one of the reasons why we saw a big gain in new home sales. 800,000, well over 650,000 expected, and 664 previous. That is a jump of 20%. Absolutely huge, 20%. Does that sound like a number that we would post going into a recession? No, it doesn't. That's strong consumption. That speaks to strong consumer confidence. It also speaks to interest rate expectations coming down. That's fascinating stuff, guys. Just that fast you can go from being in a sort of a recessionary, the economy, woe is me, into a real bullish situation where a lot of people are saying, man, that's a strong housing market. Well, I don't know that it is or not. We saw a downturn in the interest rates, and that definitely is going to help consumption on the real estate end of things, but it really will boost sort of your GDP and your economic growth. When people are buying houses and buying a lot of them, that means there's sort of the impetus to to build houses. And when you get the building and the construction and the materials and the real estate agents and all of it, it turns into a giant party and you go into a cycle of economic growth. It's all predicated upon low interest rates. Building permits are down. Shane, you said building permits would go up. Not this time of year. We're going into the fall months. Seasonality. Everybody's getting ready for the winter. That doesn't shock me at all that the building permits are down. The home sales, though, really is the big one. Crude oil inventories, we just talked about that. Negative 0.60 million. That's about 607,000 draw. That means that the supply came down. Sort of a bullish market driver today for crude oil. Very, very fascinating, the situation we find ourselves in with WTI crude oil pricing. We're pricing. I'm watching it right now out of my eyes. 65. Very, very flat action right there. We either make the next leg up or we come off. This is sort of a bullish market driver. We're still about 4% beneath the 5-year seasonal average for WTI crude. It's interesting. I don't really know what's going on here. We should be posting builds here. We're posting draws on supply. That's definitely, when you couple that with the interest rate cuts, that is what's keeping sort of the legs onto the wheels on the crude oil market right now and keeping it right up around 65 exactly. I mean, that is really an astonishing level to be trading at now. It really is. I mean, that's very, very high. We should be seeing this thing down in the high 50s, and we don't. Interesting stuff, guys. But we can still trade it. That's the key, is can we trade it? Does it matter? Does all this economics matter? Not really. We just need to be able to trade it. And to do that, we need volatility, and we've got it today. All right, so let's go ahead and take a look at some of the other things. New home sales is going to be our big fundamental of the day today. Sales of new single-family homes in the U.S. jumped by 20% from the previous month to a seasonally adjusted rate of 800,000 in August 2025, the highest level since January of 2022. That's fascinating. Following an upwardly revised 664,000 in July and beating forecasts of 650. So this is an incredibly bullish print for new home sales. It suggests that consumption's strong. Economic growth is still there. People are still buying houses. That means that you have to get financing. And what was the big, why would everybody want financing right now? Because interest rates are down, mortgage rates are down to the lowest they've been in several years. So you see a big, sort of rush to buy a new home. You can see new home sales right here, big time spike, guys. This is as high as it's been in a long, long time. So this number is definitely being lauded by some economists saying, hey, The economy's strong. Things are good. The interest rate cuts are already working towards sentiment. Interesting stuff, that's for sure. All right, let's go ahead and get out to price action again. This was a good look at a trade that we had yesterday on our 920 EMA crossover workshop. I really want to thank everybody for joining us. We had a lot of people joining that workshop, and I really am confident you got something out of it. If nothing else, you got really the basis to build a strategy. We had great ideas about using Bollinger Bands with the 920, with using double tops and double bottoms potentially with the 920. We just played this as a naked swing trade for the 920 EMA. So right now the question is this: do you cut your trade off or do you let it run? That's really what it's all about right here. Do you cut it off or do you let it run? U.S. dollar, Japanese yen, we sort of got the breakout that we're up about 0.75% today. The U.S. dollar has sort of shown signs of life. Really a beautiful breakout on the 920 cross. What would you do? I mean, right now you broke. The way that we've got our trade design, we're looking for about 2,200 to the top side. We're risking 1,500 to the downside. We've got about 700 profits. So we're almost halfway home to a 1-to-1. Do we take the money? What do we do? What do we do? I mean, it's a good question. What do we do? With a swing trade, you're probably going to have to hold them. Now, I'm watching our scalp out of the corner of my eye, and we're printing about 65.02 or 3. The question there would be, do we make our trade bigger up to 25 and try to take a bigger position there? 64.05 looks, or 65. We're going to get stopped out in a second. If you're swing trading, now what we're doing over there is scalping. If you're swing trading, you've got to sort of say, okay, I took an initial risk of this. So if the market would have reversed against us and we would have been completely wrong, we would have had to get in our head that, we're going to take a $1,500 loss. Now it's gone in our favor, $700. And we're thinking, I could use $700. Yeah, we all could. We could go out and buy a nice jacket or a pair of pants or maybe a watch or something. I don't know, whatever you want to buy. The problem is if you take the trade off now, you're going to run into trouble with your risk management. Meaning, every time this thing breaks and goes against you, you're going to get stopped out. You're going to lose 1,500. This time, you're going to take 700. What does that mean for your success rate? It means you've got to win an awful lot of trades. You've got to win 70% of these if you're going to lay 1,500 to make 700. So the right answer is we've got to let it run. Now, do we want to wait for the top of market structure? Now, this is an interesting question. So we've got it up at about 2,200 right now. Could we dial this thing in and maybe bring it into a 1-to-1? I don't have any problem with that. As long as you're getting at least a 1-to-1, go for it. I have no problem with that. Now, if you cut it off right now and take the money, that's hard for me, guys. This is one of the hardest things that I still deal with it, every single day. It's hard not to take the money. It's like, well, maybe you should take it. Well, maybe you should, maybe you shouldn't. I don't really know. It's really difficult to say. Personally, I'm going to stay the course and stick this one out. We're going to leave this one running on demo until we get our target filled, something like that. So definitely want to keep an eye on that. Universal, hey, Shane, any gold update? Angeli, how about a trailing stop? There's nothing wrong with that, Angeli, and you're not wrong. So if we go 700 right here, I mean, a lot of folks immediately, they say, okay, we're going to break even. I don't hate it. I really don't hate the idea. It's just make sure that you keep it to the point where you are going to do that consistently. Be consistent. You've got whatever you do, you've got to be consistent. You've got to be consistent. It's absolutely perfect. Eli, don't be greedy. Absolutely. So what are we going to do here? I'm going to be looking for a 1-to-1 risk versus reward. I think that's incredibly doable. Going with core PCE a little bit later this week, probably going to be an interesting 36 hours with this trade. But this is a true swing trade. We've been in it about day 2. We got the move that we wanted, and now we're just sort of in the market just waiting to see how this pans out. If you move to break even, I don't have any problem with that. There's nothing wrong with risk-free trading, guys. If you want to ring the cash register, though, right now, after taking that big initial risk, I can't sign off on that. You've got to get paid for your time. So you've got to get at least a 1-to-1 or it won't work over the long run. Something to think about there if you are interested in this type of trading. Okay, Great Britain Pound USD, and we got a lot of people involved in the Great Britain Pound USD that I've heard from. They say, Shane, what do you think? And I said, well, you've got a cross under developing here. Now we're going to pull up the macros and the support zones and all that jazz. You've got a cross under. What does that mean? It means that basically you've got the 9 EMA crossing under the 20, and we're starting to turn south here. So potentially a bigger correction is possible. I think that if you do get that crossover, maybe you play that one to the downside. You can see that the risk is going to be relatively small. You're probably going to need one more day, though, to get that crossover. Interesting stuff, guys. Sort of a tough call for me right there because I don't really believe the U.S. dollar is going to put on a show for that much longer. Let's go to a weekly. What do you have on the weekly here? Without looking at the 920s, what do you have? It's really just a tough type of a situation. No question about it. You've got, we can run Fibonacci's if you wanted to have an area maybe to buy, but I really don't like this. This isn't much of a range. Spike low, spike high. Now we're coming off. We went right to 78%, which is sort of it lines up perfect with our 20 EMA. So 134.16 and 134.17. Okay, I can buy that for $1. That's interesting stuff. What do we think, though? Let's back up. Let's go to a monthly. Let's see if the monthly shows us anything. Not really. Not really. If I was serious about a monthly chart right here, and I really don't like the market structure of the last several months with the Great Britain Pound USD, this would be real easy. Something like this. 38%. I mean, that's where the money was right there last month. I would be looking at 131.44 as being robust downside support anyways with the Great Britain Pound USD, but I would probably circle back around to that daily and be waiting for that crossover to set up. I think that's probably the way to play this if, in fact, you want to. Okay, so an interesting point developing in our U.S. oil trade. Let's go ahead and take a look. You can see we sort of came down and we were positive. I got to get some of this scribbles off of here. We sort of came positive, and let's just get rid of all the drawings. Okay, so we came positive. We're still sitting on our 64.85. Now, one of the things to remember if you're trading U.S. oil, and I'll just tell you this from experience of I don't know how many years now, but 30-minute charts are absolutely hugely important when it comes to commodities, definitely during the U.S. session. So if you look at your 30-minute chart, what do you have? Okay, we're severely in overbought territory, which shouldn't surprise anybody. We're on a trend day up of about 2%. Typically what you see with 30-minute charts, starting at about 7 a.m. my time, 9 a.m. Eastern, this bar right here, what do you have? You've got the volumes really begin to pick up. Now, your high volume is when our news came out, and now you saw the volume really decrease. And the volume decreased as the price rose. What does that mean? It means there's no sellers in there. It means the buyers are winning. Do we expect volume to pick up right now? No. This time of day, probably not. Now, is it common to get a retracement out of a 30-minute bar back into the body of the other bar? Absolutely. So do you have a decent trade here? It's not a bad trade. I believe we maybe weathered the storm. We're profitable, but are we going to get maybe this area right here? I think we could very easily get it. Or the market could go up and take out our top, sweep us out of the market. It's been a pretty good trade, though. We have seen that fight at 65. I'm not really willing to say that this was a complete failure, but we didn't see the sellers really step in and defend that zone. Now, they still may, but we're in this trade way too long for this to be a scalp. We should have already been in and out of this thing, either stopped out or got our profit target. At this juncture, I'm thinking, what should I do? You could hold them. Wait and see what happens. There really isn't any reason to keep your stop loss at 65.09. You could probably move it right above the high. We're going to leave it because it's only about a pip difference, but it doesn't look like we're going to be able to beat this trend from our zone. Now, we may get sellers to step in and just bury 65 right now. This is a tough time of day to be trading crude oil. 11:33 my time, 1:30 Eastern. Kind of lunchtime, going into lunchtime, you don't really have that big rush of volume that we're expecting. And if you're going to win a trade to the long or the short, you've got to get volume. Where are the sellers going to come from? We're just rotating around 65. My guess is we'll break higher and make a new high, but maybe not. We're still in it. We're still alive. We're at break even. 3 things you can do. Number 1, you can let it ride. Number 2, you can move your stop. Number 3, you can just cancel the trade. It's really up to you. For me, I'm going to let this thing play out and see exactly what happens. Okay, now we do have some key events that we need to preview and also some other key markets. If you have any markets that you'd like to look at, be sure to let me know. Tonight, monetary policy meeting minutes. That's the FOMC, not the FOMC, it's the BOJ minutes. They're going to talk about their decision to hold rates static last week, and they're also going to talk about that ETF runoff. I believe it was 250 billion, something like that. I think it was billion yen, if I'm not mistaken. But it was a huge holding that the Bank of Japan said they were going to eliminate, and it was all ETFs, something like that. Interesting. The verbiage in the policy meeting minutes could definitely move the yen, so be ready for that. Tomorrow, sort of an interesting day. Swiss National Bank. What do we expect the Swissy to do? Are they going to raise interest rates or are they going to lower them? They're going to hold them flat at 0. Don't be surprised if this goes negative again. The Swiss National Bank surprises everybody. Remember, they are the Cowboys when it comes to monetary policy. So if you're going to be trading this evening, or this evening my time, but if you're going to be trading, say, that London session, you're going to need to be aware of the S&B, especially if you're looking at the Swissy. Now remember, Swiss National Bank can impact not just the Swissy, but the euro and the pound. So the pound charts that we were just looking at, be ready maybe for a little bit of action, maybe some spillover from that Swiss franc, that S&B decision towards the Swiss franc. Let's go ahead and pull up the Swissy and have a look. You see the 4-hour chart right in here. You've got sort of a situation where you could probably draw Fibonacci here if you wanted to trade it. I don't recommend doing this just because you've got that key event coming, but maybe 79.42 might be a nice scalp, but I wouldn't be looking for 25. I'd probably be looking for like 8 or 10, something like that, something very tight. Let's back off and take a look at the macros regarding the Swiss franc. Just been an incredible downtrend for seemingly ever. I mean, really, for seemingly ever, you've been just in an astounding downtrend. Really, all of 2025 has just been negative. The Swiss franc's put on just an absolute clinic against the U.S. dollar. So what can we really say about this? The first thing I would say is it's a bearish trend, no question. L formation. L formations are what? Run and then rotate. Beneath 38%, that signals trend continuation. The biggest thing I would remember is if I was trading the Swissy is I'd be looking for macro levels. What do we got right there? You're getting back into that 2011 crisis time right in this area. Are we going to fill that in? Potentially. There's your spike low way down there. What happened then? Financial crisis. I believe that's when they depegged. I'm not necessarily certain. Don't hold me to that, but I believe that is when the Swissy was taken off the peg by the S&B. Surprised everybody. 70, 69, something like that. So what are you really looking at? You're looking at like 70 even. Now, we still have a long ways to go before we get down there, but you can see that the trend is definitely down. Do we want to think about buying down here? I don't know. About the only way I would think about buying is it would be off a key level, something like 75-ish maybe, and that's still way down the queue. So for right now, I'd sort of be in a holding pattern. Of course, I would look to be selling any sort of retracement, but you'll see that our retracement zones are way up there, 83.50, something like that. Probably going to be a no trade. Let's go to a daily. You want to buy it or sell it? I would much rather sell it. But could you buy it? Yeah, you could probably buy it, something like that. If you wanted to bid, if you wanted to be a net bidder on the S&B this evening or during the London session this morning, wherever you may be, you probably could use a Fibonacci, something like this, maybe 62%, 78.83, something like that would be probably a pretty good entry. Not the best, but a pretty good one. I don't know. We just got to wait and see what happens there. Depends on what the S&B does. But as far as this pair goes, really tough trading. It's tough trading right now for the Swissy. I want to see it really. I want to extend that range and be able to buy maybe from one of those key levels. But I mean, take a look at your weeklies. Your weeklies aren't very good. I mean, what I mean by that is you've got really just doji, hammer, doji. That's tough trading. I don't care who you are. That's tough trading. You could be the biggest pro in the world or the biggest novice. You could be an algo trader. It's really difficult to get a bead on where this market's going. I'd probably be a no-fly zone for me. If you wanted to sell right up there from 80, 80, 12, 80, 09, you could certainly do that. But I don't know. That would be really tough as far as that Swissy goes. Let me see. Bobby Bob, what about taking partial money? I don't know. Great Britain pound Japanese yen. Let's go ahead and we can take a look at the Great Britain pound Japanese yen if you want. Hard. I mean, it's 200 is in play again for this pair. Once again, that key event from the Bank of Japan could definitely sway valuations. But you're definitely in a situation where you're in complete compression right around 200, sort of like our U.S. oil trade where we're at 64.99. We didn't get the big rush we should have got down there right around 64.90. Oh, well, now we're at 65.02. We're getting compression right around a key number. I think that it's important to really understand that this market could definitely break higher above 200, or this could set up to be a top. I really don't have much of an opinion towards this pair. I want to see it move. I would love to get the breakout up here. Then we just buy retracements, and we'll be in pretty good shape. But for right this minute, it'd be very, very difficult for me to make a market call. If you wanted to short, you could. If you wanted to buy, you could. I just don't know that either way is the right answer. I really don't. You hear me saying I don't know a lot more these days because these markets have definitely become a lot tougher a lot tougher over the summer than they were last spring. Last spring was pretty easy. You'll see our monthly there. Let's go to our daily. Daily, you see just the degree of compression right around 200. Could we get maybe a bid on a 4-hour? It's just really tough. I would pass. If I wasn't already in this market, I would not get in this market. I would wait. You want to see 200 break. You want to see 200 break and maybe trade up here somewhere to 201, something like that. And then we can actually make a decision on what to do from 200 with a little bit of confidence. Right now, I don't have any confidence that we're going to do anything. I would wait for that BOJ tonight. During that London session, that overnight, that BOJ minutes. Maybe we'll get a move out of this pair then. Probably will. Just depends on, what exactly is said or what isn't said. All right, a couple more events that we need to cover here real quick, and then we'll go ahead and sign off. You got an ECB economic bulletin. I wouldn't worry too much about that. What I would be looking at potentially is tomorrow's U.S. session. Continuing jobless claims, there is going to be more impetus on that just because of the employment situation. Core durable goods. Durable goods is going to be another big one. We saw the big home sales numbers today. We're expecting still to be negative for durable goods orders. I don't think you're going to stay negative. Don't be surprised if we get a topside surprise here, and that'll sort of suggest that maybe we're not going into a recession. Maybe the rate cuts are poised to bring economic growth to a new level. Watch durable goods tomorrow, though. That's going to bring a lot of volatility. 8:30 a.m. Eastern, about an hour before the U.S. Open. You're going to want to keep an eye on that. Also, GDP for Q2. I'm not really expecting anything huge out of that. Remember, Q1, we had a negative GDP print, and then we had the big preliminary number for Q2, which was at 3%. Be ready for anything. Probably, I would say it's going to be right around 3% somewhere. I'm not necessarily certain, though. Could be around 3%. More than likely, it's going to be right around what's forecast. I would be surprised if this was going to be a really bad miss going into that GDP number. And then you've got goods trade balance. You don't need to know that. Initial jobless claims, you're probably going to need to look at that a little bit harder. 233, we're expecting jobless numbers to go up. I think we could definitely be in a situation where they do just that. And then going into Friday's trade, I'll preview this a little bit Friday, but the PC numbers. Tomorrow, existing home sales, be ready for that as well. These all can drive volatility. This one's during the U.S. session at about 10 a.m. Eastern, so about an hour. About a half hour? About a half hour after the U.S. Open, they're going to drop this number. This could definitely shake things up and be a big-time market driver. So you're going to want to be on your toes for the next 24 hours. As far as the U.S. indices go, let's check in on our U.S. oil pet rock. You can see we almost got paid off, but almost doesn't really count. Now we're sort of trending higher. I would be really surprised if we don't end up getting stopped out. Very, very bullish here. 65's catching bids. Would not shock me if we stagnate and then sell off going into tomorrow's session. But right now, for a scalp, this isn't playing out at all the way that we wanted it to. But we've got our risk rewards dialed in. We've got our risk down. If we do get some sellers, that fast from 90 or 65, we may in fact tick down to our 85 target. It is possible. As far as what we should be looking at going into tomorrow's session for our indices, a couple of things. Our 920, all right, on our Great Britain pound, that's one thing. Let's take a look at the NASDAQ, the US 100. Interesting stuff. So right in here, we sort of got way back in here, we got the bid. We got the bid for the US 100 on the daily. Is it time to start thinking about selling this market? Well, you're going to need to really make up a lot of distance. The 9 and the 20, a lot of space between those moving averages. That suggests that the trajectory is strong and the trend is strong. So you're going to want to be sure that you keep a close eye on this. This is going to need to really close down before we start considering a sell. But for me, the big level that's been there really since the beginning of time, and it's a natural level, is just 25,000. So if we do rally up and maybe test 25,000, it could. If durable goods orders comes in pretty good and core PCE comes in maybe less than expected, then we could definitely see the case for maybe a greater rate cut, and that'll drive stocks way up, especially tech. I'm looking at 25,000. Be ready for a trade idea, probably shorting from just beneath 25,000 coming out maybe tomorrow or Friday. That's interesting stuff. As far as what can we really say about the prevalent trend, it's bullish the entire way. Double top right there and a pullback to 50%. Still relatively bullish. We bounced right off that 9 EMA. Interesting zone. Absolutely interesting zone right here. I'd keep a close eye on that level right around 24.4, somewhere down in there. Interesting stuff. All right, everybody. Let's see. We got a couple more questions, and then I'm going to go ahead and sign off. Universal, what about gold? If you put a buy limit at the 37.25 area, let's see. Okay, let's go ahead and pull gold. I'll pull gold and then the Australian dollar USD, and we'll go ahead and call it a day. All right, gold. I don't really want to do the 920. We've covered that a lot on gold. Let's go ahead and just take a look at some Fibonacci's. Okay, gold, there it is. Beautiful thing. Key level 37.50. We sort of had an area where we traded high, we blew high, and now we're in retracement mode. So for me, this would be an absolute no-brainer. What do we want to do? I want to buy it. I want any excuse to buy it. How are we going to buy it? Straightforward. Right there, spike low, spike high, and there's your bid. So you're looking at a bid at the 37.25 area. I agree. Universal, I concur. I agree. You've diagnosed that market correctly. Do I want to go long right now, maybe ahead of 37.25? Yeah, I don't have a problem with it. 37.29, maybe 37.30. Pretty good zone. Now, remember, if this does get taken out, and it may, I mean, if it gets freight trained, you got to stop yourself out. You got to set your trade up so it's a 1-to-1 or something like that. Just if I was going hard, let's say I was going to go hard right here from 37. Let's say I want to get in right now, 37.30. Okay, so let's go ahead and trade it. Let's go with a buy limit order. I want 37.30. I don't want to go at market right now. That's going to give me, let's go 37.25. That's going to give me a bit of a shade above 37.29. Okay, that's going to be my buy limit. So what should my trade look like? If I was going to align my stop loss, what would it be? It's going to be right beneath. It's going to be somewhere right in there, right around 24. It's going to be beneath that 25 handle. So maybe, we could shade it just a little bit. Maybe we want to go, I don't know. I want to give it plenty of room to work. So maybe 23, something like that. So what does my take profit need to be? Probably somewhere up in here, 37.70. That's a pretty good trade. That's a big-time payoff. That's almost, that's a 7-to-1. So we could do something like this if we just want to be conservative. That's a 1-to-2. I have no problem with that trade location or that setup. Listen, the trend's bullish. The trend is bullish. So you want to make your mistakes to the long. So if a comes down and sweeps us out and we get knocked out and stopped out, so be it. That's part of it. But if we get in on that bounce from the 38% daily Fibby, yeah, that's going to be a pretty good trade. Now, if we get stopped out, that's fine. I mean, we lose money, and I hate losing money. I hate losing, period, but still gives us 62% down there, so we can still do business potentially from there, and from there on, those trades are going to be bigger. We're going to be looking for more money to the top side because we know the pullback is just shaking out retail. We know the broader trend is bullish. You're seeing gold pull off a little bit because the dollar's on the rally. What can we say? We sort of figured there was a dead cat bounce in here for the DXY. There is. Can the dollar sustain this strength? No way. No. So we'll see. We'll see how this goes. I'm still eyeballing my U.S. oil trade up there about 64.93. We still need that 8-tick washout. We can't seem to get rid of 90. 64.91. If we can get rid of 90, then we got a chance. Let's see if we print right here. Very, very tight trading, 64.91. Okay, if we break 90, then we have a chance to trade down to 85, and it should happen fast. But they're dug in at 90. They're bidding 90 hard. Okay, a little bit of volatility spikes, 64.92, 64.93. Can we get anybody to wash 90 out? Can we get them to wash 90 out? If we can get that, then we'll have an opportunity to hit our 85 target. Do we get it? Market's dead. It's stale. You'll get a rush of volume probably in the next 15 minutes. Going into probably 2 p.m. It's back up to 95. You can see that the heat is there. The sellers really want to take over in the late day, but this is really difficult. It's difficult right now. Why? Shane, why is it difficult? Because there's no volume in there. Look how low our volume is. You need volume, guys. Volume is sort of the catalyst behind everything. We still might get that one, though. Risk managed 1-to-1. Yeah, let's go ahead and see. Okay, one last question, Matomi. I am short on the Aussie USD. What do you think of the pair? Well, I mean, a lot of folks are trading the Australian dollar pairs right now. I always like the Aussie. I've had a soft spot for the Aussie. This right here is going to be our coded 920 on the daily. You can see we're sort of working on a cross under, the 9 crossing under the 20, but we're not there yet. Let's go ahead and go to the 4-hour. Nothing wrong with being short right now. There was your short signal on the 4-hour crossover, 920. 9 EMA crosses under the 20. There's your sell. This one I especially liked because, why? You were in oversold territory right there. That would have been your stop, right? You would have got swept out, which is fine. You wouldn't have had a trade just yet. That would have been your indicator to get in. I don't have a problem you being short. As far as what can we look at for downside support levels? There's a lot of room here. to the downside. $64.05. There's plenty of room to that. Let's go to the daily. Price is beneath the 20. Yeah, I mean, I don't hate it to the downside. I think you could probably be okay. Keep a close eye right there on what Monday's low. Monday's low is at 65.74. So I would be looking at 65.75 as being potentially an issue. But once that's gone, I mean, you see you're banging up against it. You've got a nice L formation. It's a bearish market. We're sort of banging against that zone. You know, do we get the big sell-off there? I think it's possible. Absolutely. It just depends on where you got short from, how lucrative the trade is becoming. But it looks to me like you're probably on the right track here. So it's a pretty good trade. Australian dollar pays good. It's just difficult to trade. Yeah, I mean, there's a lot of market drivers there, Eli. A lot of market drivers. A lot of folks completely ignore gold, and they shouldn't be when they're trading the Aussie. All right, guys, we covered a lot of markets today. We covered a lot of concepts. We're watching gold closely. Dollar yen, we're watching closely. As far as our U.S. oil trade, this thing should have broke by now. Now we're going right back up to break even. Interesting stuff, everybody. This is really a good learning tool. How you see the big round numbers, the key numbers over and over and over again really drive participation, especially in the commodities market. Does this market break down or up? I mean, you're going against the trend. The only thing you really are confident in is you've got a stop-loss location that's pretty good. I could see this thing breaking down. I can see it breaking up. It's just the action's right there at 65. It's coin flip at this point. We should have got paid off right away. Didn't happen. We'll see how it goes, though. All right, everybody, I want to thank you for joining me today. We went long. Again, I'm pretty much going long every day now. We're going to be back tomorrow with our Switch Markets live trading webinar. I'm going to talk about Forex and futures, sort of the difference between, and we're going to look at some key levels, some key markets, talk about Forex versus futures. We're going to talk about some currency market futures products that are interesting that you may have not considered if you're in the United States for trading currencies, and those are going to come off of the CME, the 6E, or excuse me, the Euro, not the Euro FX, but the FX contracts are a pretty strong way to trade currencies. We're going to go over those. We're also going to talk about the key Forex pairs and really take any questions that you want along with some key events. We're going to recap some key events, but it's going to be our live Switch Markets trading webinar, Forex and futures. Be sure to join us either in the How to Trade trading room. It will be live there, or you can join us on the Switch Markets YouTube channel exclusively. This is sort of exclusively for our Switch Markets community. So if you haven't joined us over there yet, be sure to head on over, subscribe to the channel, and you'll always be in the know when we do have a live stream or a new video or a short or potentially our weekly trade ideas. That's where those are found as well. And right now our U.S. dollar Japanese yen is one of our weekly picks to click. So that was a pretty darn good one. Right here, I'm just infatuated with this U.S. oil trade. It feels like it wants to go beneath 64.90, and we just aren't getting it. This is scalping. This is a very difficult thing to do. Best thing I can recommend is just build your trades and stick to them. Build them and be strong with what you think. All right, everybody, I'm going to go ahead and sign off here for a few hours. We'll be back tomorrow. I'm going to sit here and watch the rest of this U.S. oil trade. I don't know how long it's going to take, but it doesn't look like it's going to be over anytime quickly. So have a fantastic trading day, trading session. Lots of news coming our way, lots of volatility coming our way. Should be a fun 48 to 50, 54 hours to close the trading week. Very much looking forward to it. Have a great session. Trade the action well, and we'll talk soon. See you.